Hey guys and girls, what's going on? It's James here, and I want to shoot a video talking a little bit more about the fractal that I posted a few days ago. I want to show you how it's playing out so far, and also how these things work, because I've gotten some questions from folks, asking what a fractal is, how they work, and all that type of stuff. So first off, all a fractal actually is, I'm not even sure why it's called that, but all a fractal is basically you can take a section of the chart and just copy it like that, and then move it over and kind of put it with your new chart and say, okay, this is what's going to happen. Okay, so in this case, this fractal is actually drawn from the double top on December 16th, 2017. It's drawn from there down to the bottom. So that's where the fractal comes from. Okay, from over here down to over here. And then what I did was, because I drew it from the second top in that double top, I lined it up with the second top in our current double top. Okay, and this is what it looks like. Now, some people are seeing this and they're kind of rolling their eyes at it. I've gotten some hateful messages from people. I've gotten laughed at, and then I've also gotten people who are really happy with it. So I thought, I probably need to do a better job of explaining it, because I think right now people think I'm just simply copying and pasting a chart and going, okay, this is what I think is going to happen. There's a lot more to it than that. Trust me, before I do these videos, I come up with some really crazy ideas, but when I do due diligence on those ideas, they don't pan out, they don't look feasible, so you never hear about them. But if I'm doing a video on something, it's because I've done due diligence, I've done the technical analysis, I've looked at it from different angles, and it's still passed the litmus test as a feasible scenario. Doesn't mean it's going to happen, it just means it's feasible. So in this case, first off, this looks pretty good so far, okay? This purple box is what's happened so far, and you can see it's playing out very nicely. Yesterday, the fractal predicted a top of 10,971, and our top was actually 11,080, so it was very close. Today, it predicts a top of 11,040. We'll see what happens, okay? But when I started looking at this fractal more and more, I started drawing lines on it to see how these levels lined up, okay? So if we look at this line here, this big drop, it's like, okay, that stops down around 6,900 bucks. So would that make sense with our current chart, with our current conditions? Would it make sense for price to stop there? And if you think about it, if I draw a red line and I go back, you can see that that actually was a support. You can see right here, this red candle actually came down and pinged off of it. This green candle had a little tail that slid through it and went up. This red candle had a tail and went up. So it actually is a support level in our current move. Not only that, but it's just under our 61.8 fib level. Okay, so that's a really important Fibonacci level. So that level makes sense. And if we go back and look, you can see that it did act as support in the past and also act as resistance. Okay, so that's a legit level. So then we say, okay, well, it bounces. If this fractal plays out, it's going to bounce off that level, and it's going to bounce up to this level. And so then you have to ask yourself, why would it stop here? What would stop it? That's going to be some kind of resistance would make that stop. So let's draw another red line. And if you look, where's that at? $10,016. Holy cow. Okay. So $10,000. Well, when we were going up, that was a FOMO event. Once we broke through it, it was huge FOMO. Okay. But if we failed to break through it, it's a 5-figure number. It's a psychological resistance. When we're coming at it from the underside, it's resistance. And this could very well be just a dead cat bounce, right? And if that becomes resistance, there's going to be some panic selling going on, which would push it back down. And then we would go down, if this fractal plays out, to this level. Now this level is around 4,500. I'm not a huge fan of this level. This one, it tends to hang out in the middle of nowhere, okay? I haven't looked at it on an 88. Maybe it's got, it's close to the 88 level, but it's really not a support or anything. Even going back to 2017, it's not really a super important level. A couple resistance touches, but nothing special. However, we did have around 4,300, 4,000 to 4,300. This would actually be support. So maybe it slides a little lower than that. We don't know. Okay. And the next thing I'm looking at is if this plays out and it comes up like this. Right. First of all, if this is playing out like this, I'm going to be getting very, very happy, because I'll buy down here and I'll happily sell up here if we hit resistance. And that's about a 40% increase over the couple of days. And then if it dumps down to this level, again, I'm going to be buying. There's no doubt in my mind I'm going to be a buyer down here. And I don't necessarily think I would sell right here, right? If this came up like this, came down and came back up, yeah, then I'd be selling, because what is that? That's a double top. So of course I'm going to sell a double top, right? And then of course this just moves sideways throughout this range and kind of bounces off that. The one part of this fractal that I think is unlikely to happen, and I had some drawings on here because I shot the video once before and it didn't record properly. I don't think this is very likely. I think this is probably not going to happen. And the more that I look at it, the reason I think that is because of the timing. This would be May of 2020. This is where the next Bitcoin halving is going to take place. I do not think we're going to dump into the halving. If anything, that's a FOMO event. If anything, price is going to, I would think that price would go up, right? So it could be that when this whole thing plays out, and then right before the halving, price just takes off of the support line and never dumps. I think that's very feasible. So now I'm going to show you something else. I'm going to put something on there. It's called a volume profile. Okay. I don't use volume profiles a whole lot, but I'm going to use it in this example to show you something. So I'm going to scale back and I'm going to put 2018 through now on here. And when I do that, I want you to pay attention to this. See these great big gaps here? Those are volume gaps. Now, a lot of times what you'll have is you'll have price come down into those areas, and this will act as support. This big volume bar will act as support to keep it from falling any further. And then they'll just bounce around in those areas and fill these volume gaps up, right? The more trading that happens in that range, these volume bars grow. And then when there's enough volume, they tend to take off and go north. Well, oddly enough, look at what's happening in this chart. If this fractal plays out, and again, it's if, look at all the trading that would take place in this range. Look at this. We'd be ranging from now, basically from early August all the way through May. That would be about 9 months of ranging, and we would certainly fill these volume gaps. Okay? Are you seeing how I'm putting all these pieces together, how this is not willy-nilly? I just decided to copy and paste a chart? No, of course not. I've actually done analysis on this. The videos might be 15 minutes long, but I've probably done 4 hours of analysis on this, looking at different possibilities. And that's why this makes sense. You've got these volume gaps, right? You have these important support levels. You have these important resistance levels, right? All these things come into play. And again, I don't think we're going to go down this low, because if you look at this volume bar, this is a massive volume bar. I think it'll hold, right? This is right around the $4,300 level, which again lines up with our support over in this area, right, from our December lows. So with all that being said, I hope you guys enjoyed this video a lot. I want to say one other thing real quickly, and that is, guys, I want you to seriously do your own due diligence. When I say that at the end of the video, I have to say it for legal reasons, but I really do mean it. Don't just watch someone's videos, even mine, and say, okay, well, this is what this person says. I'm going to listen to them, and I'm not going to listen to myself. Sometimes you may have an idea, and you may be 100% right, and I may be 100% wrong. I never want you to miss a trade or lose money because you didn't do what you thought you should do, and you did what I thought you should do instead. I'm going to give you a perfect example of this. I'll make it quick. But if you look back here, I was a fairly new trader back in 2017. I'd only traded about 7 months. But I got lucky, and I guessed the top on December 7th, 2017, on this big wick right here. I guessed the top. I did a YouTube video saying that I thought it was time to sell. Well, people didn't like the video. People said some mean things to me about the video. People basically told me I was wrong. And because I was so new, I lacked the confidence to go with my decision. I thought, well, I'm probably wrong. They're probably right. I'll just hold. So then it came up again over here, and I just kept holding. And when it was all said and done, like a lot of people out there, I lost a lot of money. Okay, I'm not even going to say. I lost a ton of money, like life-changing money. Okay, and people say, oh, you shouldn't invest more than you can afford to lose. I didn't. I didn't have anything invested. I was playing with 100% profits, but I made 1,400% profits. So it was a lot of money. But I lost all of it. Lost all of my profits because I just wrote it down because I was too scared to follow my own gut and to follow my own analysis, and instead I was listening to other people talking, stupid shit about S-curves and everything else and how this time was different. That's why I'm so, I get a little bit vitriol sometimes when I talk about those types of people, because those types of people are dangerous. Those types of people that are super bullish and never believe that the market's going to correct, they get people wrecked. Okay, and you have to take your own responsibility for your own actions, and I do. It's my fault I didn't sell, but that stuff messes up people's lives. Okay, so I try to bring a little bit of common sense to the picture and a little bit of reason to an unreasonable world. So don't do that. Do your own analysis, do your own due diligence. If you want to take my opinions and filter them into your analysis, that would be wonderful. But don't just blindly follow anything I say, because the best traders in the world are wrong a lot of the time, and I'm certainly not one of the best traders in the world. I'm some guy sitting in a spare bedroom. Remember that, okay? 2.5 years, little less than 2.5 years that I've been doing this stuff. But all that being said, the reason fractals work, the reason that you can semi-predict what's coming is because human behavior and human psychology doesn't change, right? We like to think we're super advanced human beings. The reality is 95% of our decisions are probably made by our lizard brain, and they're based on things like greed and fear. And that's the reason that I was able to post way back in 2018 in August. I was able to post this chart. This actually predicted the bottom was going to be right around $3,200, and all it was based on this Wall Street psychology chart, right? So cliche. All I did was try to draw it to scale as much as I could, and actually measured it out. And using those measurements, I was able to say, okay, 6 should be about right here, and 7 should be about right here. And this was right around, $3,000 to $3,500 range. Ended up being perfect, right? And that was 4 months before it happened. I did a more detailed chart using fractals here. This was on August 8th, 2018. And you can see that I was calling for a bottom of $3,351 by November 24th. We actually hit $3,100 on December 14th, right? 3 weeks later, and within about $200 of my call. It's not because I was a genius. It's not because I had a crystal ball, and it's not even because I was good at technical analysis. It had nothing to do with being a good trader. The only thing it had to do with was the ability to look at what happened in the past and say, this is how people act, and they're probably going to act the same way again. And as a result, I was able to draw a fractal, and the fractal worked out. So that's all this is. It's just another fractal. And I'm just telling you that if people act the same way they acted the last time this happened, this is a very feasible scenario. It's backed up by support lines. It's backed up by resistance lines. It's backed up by the candles matching so far on this move. It's backed up by the volume profile. It's backed up by the Fibonacci levels. It's just a very feasible possibility. All right. So I hope you guys enjoyed the video. I know it's the third one today. I'm not trying to completely burn you out. It's just that I posted this a couple places, and I was getting a lot of negative comments from people. Basically they didn't like my analysis. And I thought, well, I wanted to do a more in-depth analysis and explain that I'm not pulling this chart out of my ass. This is actually something that I've done actual analysis on, okay? All that being said, please remember, I am literally some guy sitting in a spare bedroom. I am not a professional financial advisor, and you should always do your own due diligence and seek out professional investment advice before making any type of investment. Don't forget to check the description for more links. You can follow me on Twitter. You can follow me on TradingView, and of course, you can always follow me on Facebook as well.